Hello and welcome to the next of our full course lectures. This lecture is on the work of internal audit. So we looked in the last lecture at the audit committee and a little bit at internal audit, more exploring the relationship between the audit committee and internal audit. We're now going on in this lecture just to think about exactly what it is that internal audit do in the organisation. So key thing to remember here is that internal audit is a department of the organisation, so they work within the organisation, they're paid by the entity and they therefore are responsible to them. So what does internal audit do? We said in the last lecture that they carry out assignments and then they report on those assignments. And we also talked about how they're focusing on controls, procedures and compliance. But remember that internal audit, because they're a department of the business, also need to justify their existence. They need to provide value to the business just like every other department. So as well as looking at controls within the organisation, they'll also look at providing value for money. And they'll make sure that the business itself is getting value for money. So the question they'll be asking is the firm getting value for money? So they may look at any area in the organisation, it may be purchases, it may be sales, and they may say, are we getting value for money from that area? And that would form part of an assignment that they would carry out. So to get value for money, they would check whether the firm is obtaining the 3 E's. So the 3 E's would be economy. That would be whether the firm is getting their procurement, for example, at the least cost, but retaining the quality required to make the product. So they'll look at economy, they'll decide whether they're getting the least cost, and then they'll report on whether that's the case, and maybe make some recommendations to improve that area. They'll also look at efficiency, and efficiency is how the firm uses their resources available to them. So how efficiently are those resources used? Could there be any improvements? Internal audit will look at the area of efficiency and decide whether that's the case. Lastly, the third E is effectiveness, and that's all about the results. So what objectives do they have from whatever area internal audit are looking at? For example, in sales, they may well have the objective of increasing their gross margin or keeping their gross margin at a certain level. Well, are those objectives achieved? How well does the system that's in place achieve those objectives? So the first thing that internal audit will be thinking when they go into any department in the business is, are we getting value for money from this area? And they'll carry out tests to check whether that is the case. There are, however, some problems. One of the main problems when it comes to value for money auditing is measuring the effectiveness of a particular area. It may be that they're not simply thinking in financial terms. They may well have KPIs, key performance indicators, that they need to see if they're being achieved or not. Those KPIs may be difficult to set and they may be difficult to measure. So it may not simply be a case of being able to see how efficient a process is. It may be rather complex to see how we can get the results of that. So that's what internal audit will think about. They'll think about what KPIs they should measure and how effective those KPIs are. So that's a value for money audit, looking at whether the firm is getting that value for money. Let's think about some more specific assignments that internal audit could perhaps carry out in a business. Well, in the area of IT, they could do several things. They could do a value for money audit on the IT systems to see whether they're getting it. So are they getting value for money from their current IT system? Is it the best value system that there could be available? Also in the area of IT, one of the key parts is the awarding of contracts for IT. Now this is an area that internal audit will be concerned with, because remember, internal audit are interested in controls and procedures, particularly with a view to the prevention and detection of fraud and error. Contract awards for IT are a very risky area for both of those, fraud and error. So in the area of contract awards, internal audit will want to make sure that there are sufficient controls in place. Also that the procedures for the awarding of IT contracts are always followed. We don't want any problems to arise with perhaps a related party transaction, something like that. So internal audit will look at that particular area, do a little bit of investigations to see whether controls are in place and whether they're followed. So those are two areas of IT that internal audit could look at. Looking at the actual system first of all to see if it provides value for money, the 3 E's. And then looking at the award of contracts for IT to make sure that the controls and procedures are sufficient. Another area that internal audit could look at is projects. They could undertake project audits. So for example, firms will be undertaking various projects at any time. It may be that they're building a new factory. It may be that they're getting a new IT system, as we've just discussed. It may be that they're trying to launch a new product. It doesn't really matter what the project is. Internal audit may well carry out a review of that project. So what sort of things would internal audit look at when they look at a specific project to audit it? Well, they'll be asking themselves several questions. Number one, are the objectives of that project being achieved? So have we achieved whatever objectives it are that we set out to achieve at the top and the start of the project? Again, always come back to value for money. Internal audit always want to know, did we get value for money, in this case from the project that we undertook? And also, did we learn the lessons from any problems in this project? That may well be part of a post-completion audit. So once the project is over, internal audit will carry out a post-completion audit to see if there's any lessons that we need to learn from it. So internal audit again may be interested in specific projects throughout the organisation. They may be asked to carry out audits on those projects. One of the main things that internal audit will be doing throughout the year and throughout the organisation is operational audits. So what do we mean when we say operational audits? Well, this is where we're looking at specific business areas. So we're looking at a specific business area and we're asking ourselves, have we got effective controls in place? And not only do we have effective controls in place, but are those controls being carried out? So this is the real nuts and bolts of what internal audit is there to do. They're there to go into specific business areas and say, right, are there effective controls in place? Are we preventing fraud and error? And are we improving the 3 E's? Are we getting value for money from that operational area? So let's look at a few of these operational areas that internal audit would be interested in to think about what they'll be looking for. So for example, they may look at the procurement systems throughout the organisation. They may ask, are we getting value for money from our purchases? So procurement's all about purchasing different things. Are we getting value for money from those purchases? Are we paying the correct people? And are we paying the correct amount? So they'll undertake testing to make sure that there are no dummy suppliers, for example. So maybe the wrong people are getting paid. Or indeed that we're paying the correct amount for the goods that we're receiving. Are we using, for example, authorised price lists? Are we getting all of the discounts that we're entitled to? So internal audit will go in, carry out tests to see if this is the case. They'll also be interested to see if we're receiving the correct goods. So when we make orders, are the correct goods being brought into the business? And are there controls in place to ensure that that is the case? So looking at procurement then, internal audit could look at any of those areas, undertake tests on them, check that the systems are working, check that the controls are in place, and also make sure that those controls are being applied. They may also look at the marketing department. This will be a little bit more difficult because procurement will have clear systems and controls. Well, marketing is a little bit different from that. There's not a clear objective. So marketing will want to set objectives at the start, and internal audit will want to check if they have delivered those objectives. So have the objectives that they set at the start been delivered? When there are procedures, particularly for things such as expenses, have those procedures been followed? Because marketing will involve a lot of various expenses that need to be followed up. There need to be controls over those expenses and the procedures need to be followed. Internal audit will go in, carry out tests to check that that is the case. Have there been any breaches of regulations by the marketing department? For example, advertising controls. So they need to check that those are adhered to. Specifically, we are looking here at controls. So internal audit will want to see that there are controls in place to prevent fraud, and particularly in an area like marketing where expenses form a big part of it. So that's another area of the business that internal audit will be interested in. Internal audit will look at and will carry out tests to ensure that controls and compliance is happening. What about the Treasury department in the organisation? Well, this is an area where there have to be controls. Treasury, remember, is dealing with the liquidity of the business, the cash flows. They'll also be thinking about the foreign exchange risk, so they'll be buying and selling lots of foreign currency. And the key in Treasury is controls. Are those controls in place? Are they being adhered to? So that's what internal audit will want to know. They'll go in and look at the controls, test the controls, and make sure they're being carried out. Lastly, on operational audits, let's consider human resources. Remember, human resources will have specific policies and procedures that they'll have in place. We need to check as internal auditors, are those policies and procedures being carried out correctly? Are there controls in place to prevent ghost employees, for example, getting paid money for work that wasn't carried out? And are all decisions that are documented correctly? So when HR make decisions, they'll need to document them all, and they'll need to make sure that all of those decisions that they have been documented accurately to prevent the risk of getting sued for perhaps wrongful dismissal of an employee or something like that. Also, human resources will need to have policies in place to deal with loss of key staff, and disciplinary procedures will need to be adhered to. So internal audit may well go in, look at each of those areas and ensure that controls are in place and that those controls are actually carried out. So as we said, internal audit will be going into each of these areas. They'll carry out some of the assignments that we've mentioned, and then they will report on those assignments. We know from the previous lecture that the reporting will be to the audit committee, hopefully, and that audit committee will be that independent reporting mechanism for internal audit. But let's look at some of the principles of the actual report that's provided. Well, the first thing is that you'll need to consider as the internal auditor who this report is for. So generally that will be the audit committee, but again, the recommendations of the report will have to go to management so that management can implement those recommendations. So it'll need to address the objectives, and it will need to be understandable. It'll need to be reasonably concise because we need to make sure that there's time for it to be accurately read and understood. It'll also need to have a clear purpose and structure, so there'll need to be a format that's understandable, and it will need to deal with the nature of the report that's being provided. So if there have been certain targets set or certain things that internal audit have to look at, well then you need to make sure that you're reporting on those particular areas. As I've already mentioned, it needs to be concise, it needs to be easily read, because we don't, as we said in the previous lecture, want to overburden our non-executive directors. Remember, the non-executive directors make up the audit committee, and those non-executive directors won't be working within the business each and every day. So if we're providing them with information, it needs to be understandable and it needs to be concise so that they can look at it all and understand it all. It'll also seek to quantify the outcomes, because remember, we said at the start of this lecture that internal audit are a department like any other department in the organisation, and they need to justify their existence. So they can quantify the outcome to say, look, we don't think we're getting value for money from this particular area, and if we put these procedures in place, we think we can get more value for money. We can increase our profit by this amount. We can decrease our costs by this amount. So quantifying those outcomes for internal audit is very important. The report should also avoid surprises, so that you're not just dumping things onto people that weren't expecting it. People who have maybe made mistakes or aren't implementing controls need to be informed before the report comes out. And the report should be fair to all involved. So those are the principles behind providing the report. The process that internal audit will go through is broadly the same audit report that you will have seen in previous studies. So there'll be a planning process where internal audit will understand the issues, they'll look at the area that they're going into, and they'll make sure they've planned the assignment adequately. They'll then go through and gather the evidence through the testing that we've talked about. So they'll test the various areas that they're looking at, and they'll then summarise all of the results. They'll have to come to some conclusions based on the information they've gathered. Is the process they're looking at working? Are the controls working? Are the controls adhered to? Based on those conclusions, they will then make recommendations. Remember, those recommendations will go into the report that goes to the audit committee. The audit committee should then make sure that management follow up on those recommendations. So the audit committee look at the recommendations, provide them to management, and check whether management actually implement them. So that's the reporting procedure for internal audit. That's how they go about the work that they carry out. Make sure that you have a clear understanding also of the differences between internal audit and external audit, because they are quite different. Firstly, when it comes to internal audit, well, internal audit is not a legal requirement. So it is recommended that companies under the UK Corporate Governance Code assess the need for internal audit annually, and most companies will have an internal audit function, but it's not a legal requirement. It's also the case that the internal audit function is appointed by management, so that may be through the audit committee, but at the end of the day they are another department of the business, so management do appoint internal audit. The report that they carry out is to management. Again, it may well go through the audit committee, but it's for management and for management to act upon the recommendations. And that report will be on the controls and systems in the organisation. So are the controls in place? Are they being carried out? And are all of the systems compliant with laws and regulations? So that's what internal audit are there to do. Comparing that to external audit, well, external audit is a legal requirement for larger companies. Remember, if you're a large company, you're going to have to undertake an external audit, unlike internal audit, which we said wasn't a legal requirement. Also, the external auditor is appointed by shareholders. Again, the audit committee may recommend the external auditor, but the appointment is made at the AGM by the shareholders, unlike the internal auditor, who will be appointed by management, again perhaps through the audit committee. The report that is provided by external audit is to shareholders, not to management. So remember, external audit report on the truth and fairness of the financial statements, but they do that report to the shareholders, unlike internal audit, who report to management through the audit committee. The report provided by the external auditor, remember, is on the financial statements, the truth and fairness of those financial statements, whereas we've just said internal audit report on the controls and systems within the organisation. Lastly, external audit express an opinion, and that opinion, as we've said, is on the truth and fairness of the financial statements, unlike that report provided by internal audit on the controls and systems in the organisation. So that was our lecture on the work of internal audit. So we should now understand the relationship between the audit committee and internal audit, and we should also understand what work internal audit carry out on a daily basis.